Hey everyone, hopefully having a good day. My name's Andy. My channel is Finding Value. Today I'm going to do the daily commodity update. Give you guys my financial opinions. I'll start with the DXY, work our way through yields, and keep in mind, yields are basically what prices everything to some extent. And the stock market, all these other things, it's just a derivative of money supply and yields, those two things. And I might do another clip for tomorrow going in and diving into kind of how this commodity bull market is transpiring and what I'm seeing. So we'll work through the yields, we'll work through precious metals, and then we'll go through a bunch of different commodities that I follow. And I'll give you my financial opinions as we go. If you guys need help with anything, definitely sign up for the finding-value.com website, the platinum membership. Use the word discount in the coupon code and get a discount. There's a larger discount for yearly membership versus the monthly memberships. So let's dive in here. We'll take a look. We've got the DXY here, and this is a relative strength indicator. All it's telling us is that the dollar is weaker than the currencies that it is being compared against. That does not mean that when this goes up, that the dollar is getting stronger in, we'll call it in ultimate value terms. This is all relative, not an absolute. So what we're looking at here is the difference of the dollar versus other currencies. And to me, it looks like we've topped. We've broken out of this pattern to the downside, signaling that the dollar is weaker against other currencies at this time. It means that monetary conditions, the monetary tightness of the United States, at least the way that the market is showing us, is loosening in compared to other currencies. So the other currencies can remain stable. I think what the markets think is that the U.S. or the Federal Reserve is going to loosen its monetary tightness. Either slower rate growth or no hikes in the interest rates and stuff like that. Whatever it's pricing in. Now, the TNX, this is the 10-year yield. And remember, this is a yield. The yield tells us that the bond market is being bought up. When yields go down, bond prices go up. And what this is signaling is that we could be seeing a top, potential top, or at least a near-term top in interest rates yields, which means that could also be an interim top in inflation. Yields go up when inflation goes up. Inflation goes up first, yields follow. When inflation goes down, yields also follow. Now, did we peak in the inflation rate? That's what most people think, and that's why yields are going down. But we don't know where this will stabilize. We don't know if it stabilizes at 3.5, if we go all the way back to 2.4, if it's 3. That's what we're trying to figure out, and what the market's trying to figure out. And inflation is driven by basically the price of oil. And I'll do a whole new clip maybe on that and what they did to kind of control all this. Bond prices are going higher here. We've broken out of this downtrend, moving to the upside. So we are seeing that move up. Remember, that's inversely correlated to yields. The 30-year yield is going down. So I'm tracking the 10-year yield and the 30-year yield. 30-year is a ways out. The 10-year is closer. And I think these are the least influenced by the Federal Reserve and the least manipulated. But they could be in there buying them. I don't know. But they're the least manipulated. They're highly manipulated in the shorter term rates, like the federal funds rate and all that stuff. But this is also falling. So what we're seeing is we're seeing TNX and TYX falling. The curve is dropping. And the TYX to TNX ratio, which I've decided to kind of follow for the heck of it, That also fell to the downside. So generally speaking, and we're not talking about absolutes, we're talking about general terms, loose terms. When this goes down, gold does not like it because the curve is inverting. That's what that means. Now, when that goes up, when this goes back up, precious metals, for some reason, love that type of scenario where the curve is uninverted. Right now, today, the curve inverted a little bit. We have a little bit stronger dollar. We're probably going to see a flat to lower precious metals price. That is what this would project, flat to lower. Commodities, we did see some selling pressure in commodities kind of across the board. We did head lower here. We're back at that kind of back testing the breakout here. Actually, it's probably like there and this, somewhere like in that. But we can come and do a back test hitting this guy, and this guy. We're coming on back, and we'll see if we can hold in this general vicinity. This is highly correlated to oil. Oil down, this will most likely be down. The CRB to S&P 500 is flat. We're sitting right on that support level. We'll see if we break to the downside or if we go back on up. I do think that we're squeezing a little bit. I'm just going to draw kind of we are squeezing where this could break to the upside, which means the commodity index very well could outperform the S&P 500. Means oil could be bouncing at some point. We'll see what the chart looks like later. But we're right at a turning point, potentially right at support. It's basically coming to a point where the buyers are equaling the sellers. We've got larger buying pressure, smaller selling pressure, where we could bounce higher here. Gold, slightly higher. I would say this is actually strong today, given we had yields fall. Well, yields falling is positive for gold, but the dollar was up. And this is priced in dollars. It's gold priced in dollars. So we are flat today in gold, flat today in silver, down 0.22% to be exact. And I still think that gold looks strong. Silver still looks strong. Yeah, we got a little bit of selling pressure back, but it's not really continuing. It's just kind of one big blast off day yesterday, and it didn't really move anywhere today. And then platinum also slowing down. You can see the opening and closing prices of these candlesticks are slowing. It's a form of momentum. It's a form of velocity and momentum. Usually when they do this, they want to turn, or they want to consolidate and then finally turn. That's what the candlesticks mean. And you know, these upper candlesticks usually mean you want to go lower. If we get wicks on the bottom, it usually means you want to go higher. It all kind of ebbs and flows together based off of velocity movements is what I call it, with the opening and closing prices of the candlesticks, the size of the candlesticks, the buying and selling pressure. XAU to gold ratio down a little bit. The mining companies selling off. This is a bearish engulfing candlestick today, where it engulfs the one before it. We could see a little bit more downside where we see underperformance of the gold and silver mining companies in relationship to gold in the short term. GDX flat today. We're right up against that resistance line. We'll back out and take a quick look at that long-term resistance line that we're going to have to try to break through. It's this blue line going across. We hit it a couple of times through here, hit it through there. We hit it, if I were to extend it, we've got some selling pressure that we had back here. So there's some spots that we need to basically break through in this general vicinity to break through it. SILJ also getting a little bit of selling pressure today. It doesn't look too bad. We got to get back through all this buying and selling above us. But it still looks good for a grind higher. And that's what we're doing. We're grinding, bumping and grinding higher. Crude oil down 3.44%. We are on that support level. Are we going to break lower with this support level? I know everyone and their moms, like who's in the disinflation deflation camp, is all cheering down here, guys. And I'm getting more messages about this sell-off. They're using price and coming up with a narrative based off price. What I'm going to say is, let's see what happens over the next week or so. And if we're going to stay down here, if we're going to break through this, we should see a big break to the downside and a strong closing. If we see buying pressure tomorrow where we rocket up higher, then we know where we stand with the buyers. The buyers are holding this line. So let's see what happens tomorrow. What I'm going to say here is I don't think we're necessarily going to break down here. And why do I think that? Well, we've come on down with a lot of momentum here. And we didn't break. We held this line. We bounced higher. We came back. We bounced again. And the sellers are trying to push this thing lower. They're trying. And I don't think we would have broken this trend line if we were going to break. Now, I could be wrong. I've been wrong before, and we're just playing with statistics and probabilities here. But we broke out of the downtrend. We're moving sideways. And usually what happens before a big move is they try to push you lower, scare everyone out so they all go short, and probably push it down lower so I get a bunch of messages of deflation and disinflation people. And then we're going to rocket higher, potentially, and get everybody to go short down here. Now, I don't know if that's going to necessarily be the case. I'm not doing anything like that, but I would be perhaps looking at some of these companies, looking for buying pressure to come over the next week to be adding into positions if we get that buying pressure. If we see selling pressure and it continues to sell off, I'm going to hold. I'm going to wait. And I might do a video, the next clip, on kind of what's going on with this bull market and these different commodities. Natural gas also selling off some. I do think that we could potentially head down to this support level. We could even head down. Let's back out a little bit and take a look at the big picture view for natural gas. The long-term big picture view trend line, the big boy line, is down at $4.30. I do think there's a possibility we get down there. The other trend line that we could potentially hit is at about $5, somewhere around upper fours, $5. I do think that we can maybe grind a little bit before going on up to the sideways, sideways to slightly lower, before we move on up. But we've done a pretty big move here. I do think that we are in a consolidation period and that we're going to have to consolidate a little bit longer is my guess, technically wise, looking at the candlesticks wise. But I do think looking at these areas down here, I do like that general vicinity for long-term investments, definitely. XOP, it is down 2.77%, not as much as crude oil. We have broken through this support level. We cut through it pretty good, and then we're going to have to consolidate at some point. It's got the 3 humps that I usually look for, and sometimes those humps can go all the way back to $116. Maybe it only comes back here where we get a little bit of support right where it's at. That is where it's difficult to project where exactly this thing's going to go in the short term. So we're getting some selling pressure. I do see that we could come down a little bit further. But big picture view, I do think everything looks pretty good from a longer term perspective. And we could almost see kind of like a shoulder developing. And we could pull all the way back down here. It's possible to basically get a full shoulder type move out of this thing. So the way that it moves up is similar to the way that it fell. So if you were to take this, split it in half, it came up, you came back, and right there, you're looking at $120. This guy down here is back at a little over $100. It's $107. It's possible we pull back there in the short term, and it'd be one heck of a buying opportunity, in my opinion, if it were to get back to this level down there. OIH is also pulling back a little bit, down 1.14%. Again, big picture view. We've broken the big long-term downtrend line. Now, I don't try to predict anything. I don't care about predictions, guys. What I'm looking for is, are the market conditions still good for this stuff to go up? Have we broken downtrend lines? All of those things. So in this perspective, we've broken the downtrend line. We could pull back down here before going higher. We could not. And I know everybody says, oh, well, that's wishy-washy. You know why? Because no one knows the future. It's going to be wishy-washy. We could come back anywhere in here. This is a return move, and then we move higher. I always talk about it. The breakout, step one, the return move, wherever it's going to end, and then boom, gone. So I think everything's in place. It all looks very bullish. Short-term wise, it might feel like you get kicked in the nuts. It's the way it is. And I'm looking for a potential move lower until I see more positive signals of buying pressure stepping in. But right now, we're seeing some selling pressure. The Sprott Physical Uranium Trust down a little bit today, basically a wash, down 0.28%. And we could pull back down here. We have a lot of support in this whole area down here, tons of support. So I don't think that we're going to just blow through that support level. I think we're in it right now, and it's going to get sticky. Doesn't mean we can't blow through it. If I were to look at this and where all this buying and selling pressure is, I think it's going to get a little sticky here. URNM selling off a little bit today, down 3.2%. Let's get off logarithmic here. Now, we're starting to dip below here. We've got a little wick at the bottom, not very big. So it finished quite strong to the downside. Now, is this going to be a false breakout before a rip higher? We're going to have to wait and see. If we see selling pressure that continues to come down and close strong with momentum, we are probably heading a good bit lower. If we see buying pressure where this thing puts a big wick at the bottom and puts a little hammer candlestick, puts a bullish engulfing, a bullish piercing, we do some sort of candlestick here where it comes down and then we start to head back up momentum-wise, then I would say there's a possibility that we have a false breakdown or false breakout and we go ripping higher. The false breakdowns, what they do is they get everybody basically on the wrong side of this. They say, hey, we've got a break. Everyone needs to go short. They all go short in this general vicinity and then it rips higher. So I'm not calling for that to happen. What I'm calling for is let's see what happens. Let's see what the candlesticks bring us and what the market action gets us. And we'll make a determination from there. Looking at TAN, down 3.42%. We've got a little bit of that resistance right where we're at. Let me get this thing out of here. And we're right at resistance. Bigger picture view, scrolling out for TAN. And I don't have a dog in this, or a horse in this race, I should say. But we've got a little bit more selling pressure today, which is adding to this candlestick. It's still a bloody nose, but we got to turn this thing around and head higher if you want solar to go on up. Copper, very strong today, down 0.28%, which is pretty good for what we're seeing. But this has a double bottom that's broken to the upside, and usually that moves higher. So a little confusing here is if those disinflationary guys, if they're right, then we should see copper dive lower with interest rates. We're not seeing that happen right now. It is still up here. It still looks all right, and is working its way around. Now, it doesn't mean that we can't pull back and move back to $32 or $33 again. Doesn't mean we can't go back there. But if we are going to get a deflationary type move, we should see copper dive lower. So that's what we're looking for. We're looking for what copper is going to do in this period over here. Looking at lithium, lithium is slightly lower today. Again, we're in this congestion area. Everything still looks good to me. I don't see, usually when you see a double bottom, you get a lead in, you get some sort of move up, you get a move down, then you get a pattern that looks like this, then you get one of these clips, and then we go higher. But that's usually what it does. It doesn't mean that this will do it this time. That's just usually what I'm used to seeing. But sideways for lithium, rare earth metals, sideways. We are still above all of the support levels. There's a support level down here going across. There it is at $84. And we're just consolidating. Looks like we're trying to put in a double bottom. If you zoom in, you get that pattern. And then we go higher. It could also end right where it's at. So let's see what happens. I'm not going to claim anything at this time. There's your kind of slingshot lower below the support level with that wick at the bottom, that hammer candlestick I was talking about before I move higher. That's one heck of a false breakout there, because that's a hammer candlestick, bullish engulfing, with a bearish candlestick next to it. That'd be a tough read. SPX, the S&P 500, down lower. And again, guys, I mean, we're right at this support level. Is this support level going to hold? That's log. Let me put this thing up a little bit here, guys. Somewhere in that range. So is this going to hold? Are we going to break higher or lower? We'll have to wait and see tomorrow. If we see a big sell-off tomorrow, it could also drag the entire market lower with it when the S&P 500, if it were to sell off real strong. NASDAQ also selling off quite strong today, down 2%. We're seeing a lot of selling pressure across the board here. But the NASDAQ composite, we're right at that support resistance line. We're right at that resistance line, and it does look like we're falling back and starting to sell off a little bit. But we didn't finish directly at its bottom. There's a little wick there. So we had a little bit of a bounce at the end of the day, not a very strong one. We have to wait and see if we've got more selling pressure or if we're going to move and break out of this pattern here. But we're getting some selling pressure. EEM bouncing higher here, still looks fantastic for a move higher. XHB putting in that lead-in pattern, double bottom, where I think it will eventually work its way higher, which gives me some positive signals that we could potentially move higher in SPX and NASDAQ. MU is also putting in that kind of double bottom pattern where we could potentially head higher. It's right at that kind of resistance area. Well, I drew that kind of funky, but it's in that resistance area here. That's where it is. We've got copper moving higher today, up 0.74%. This looks bullish to me. It doesn't look bearish. If we were going to see a recession, I would think this would go lower, not where we've broken a downtrend. And if we break this guy, we're in a new uptrend. So I'm watching copper. If we're in a new uptrend and we break it here shortly, I don't know. I don't see how that could. We very rare. I don't know if we've seen copper go up during a recession. Maybe we're coming out of recession. I don't know. But that's what we're looking at. That's what's going on right here. Copper's looking pretty strong. Lumber is also looking strong, up 6.14%. This is at a very elevated level compared to history. There we are coming back to a long-term support level, and we're right there basically retesting it where we could bounce higher. Now, home builders look good. Lumber's on its long-term support level, taking the highs through here. If we get a good bounce here, I don't see how that is a signal for a recession. That's strength in the economy. Stronger lumber, stronger gold, that usually is selling, telling us strength. Could also mean that China might be reopening. A lot of things going on in the background here. We've got iron ore. Iron ore is still putting in this fat, gigantic, I'll call it, huge pattern where we're in a falling wedge where we could potentially break to the upside eventually. I know you can't see it. If I were to draw something in here, it looks something like this. Something like that. Aluminum, slightly lower today, but still looks good. We're still above this long-term support level. I still think we're going higher. Looks very good. Baltic Dry Index is flat. We're trying to break out of this falling wedge. Once we break, that looks good. Now, here's the question. And I know there's like deflation, disinflation people out there. Why are we putting a falling wedge pattern with number 1 hump, 2 hump, 3 hump, and it's about to break to the upside? How is shipping about to break to the upside if we're in a recession? How is iron ore putting in a falling wedge ready to break to the upside just like the Baltic Dry Index? How is aluminum looking good? How is copper looking good? To me, it says no recession or a light recession if there is one, or it's already behind us, potentially. And we've got China reopening. That is what I'm reading in these charts. At least what I think is going on. We also have Coal going higher. That seems bullish for coal there. It looks real good. Then we have got Ethereum and Bitcoin basically moving sideways. And the reason I'm looking at them is this is basically an indication of liquidity in the market. Now, I know it's fallen back a lot of liquidity. It's probably coming out of the markets, but it looks like it's trying to bottom. That's what I'll say there. And Bitcoin's doing the same thing. So that's what I've got for today, guys. A lot of selling pressure across the board. But overall, a lot of the commodities look very strong. Yeah, oil's looking a little bit weak just because it's right on the bottom there. And I get everybody trying to I guess, flex their deflationary muscles on it. But I'll just say this. Let's wait and see what happens this next week here. You know, the rest of this week. Let's see where it trades. Let's see if that support level holds. If we get a move lower, we want to see what happens. I don't think that we can go back to $30 a barrel. I don't think we can go back to $40 a barrel. And I don't think that that America, the government, can load up at $70 oil and have it actually stay there. They can't load up hundreds of millions of barrels without the price going up. So I think, it took them hundreds of millions of barrels to flood the market to get the price where it's at today. China is closed, and we've got inventories that are still falling. So it's an interesting dynamic. I think it's actually a huge opportunity in oil because of what they were trying to do. If you guys need help in figuring out what companies, I have highly leveraged companies. It works in both directions, though. It moves up like mad, and it also comes down like mad for high-cost producers where you're getting closer and closer to their cost of production. But when we go on up, oh man, it's going to be a beautiful thing. It's going to be so beautiful because they're highly leveraged to the price moves, and when they go up, they earn many multiples against their higher cost production. So if you're interested, definitely sign up. Finding-value.com, Platinum membership. And if you guys like the content, give me a thumbs up. Subscribe to the channel. I go over these big picture views all the time, and maybe I'll go through kind of what's going on with the markets, the commodity markets here, give my opinion of what happened the past 2 years, and maybe what's coming up in the future. All right, guys, we'll catch you later. This is Finding Value.